All right. We are officially live. And I'm going to go ahead and check just on the back end that this is officially up and running and that you folks can hear me. Yes, live from the area code 713. Yes, we are good. All right. Well, we will go ahead and jump right into it. I know there's going to be a few more folks that are jumping in. How this will go is any questions that you happen to have, we'll leave that towards the end and go ahead and just say what's up, especially if I haven't heard from you in a while, because you all are my favorite people. And here we go. The topic for today, as you see it, the news officially quitting real estate, and I am selling everything. I started with selling my single families, and now over the years have sold the multifamily side as well. So we'll go ahead and jump into it. Go ahead and just below for anyone who's on here live, drop below where you are from. I'm here in Houston, Texas, and let's jump right into it. So first and foremost, there we go. Let's drop into it. What I am seeing is it's still steadily low inventory with a high amount of demand. And there's different, of course, spaces that are out there, and we'll go into that at a later point. But let's stick to multifamily, for instance, is that the expectations of sellers is still very high. And I know the interest rates are starting to come up a little bit, but there is that sweet spot between where the seller's expectations are and where buyers are, and buyers are still actually coming up, but sellers expectations are coming down just a tad bit. And I'll give you a prime example of the very last property that I'm selling, which is in Indianapolis, Indiana. And guess what? Once that property is sold, I am officially out and I have sold everything. Sold about 150 single families, sold my 46 units, sold my 50 unit, my 280 units, and this is the very last apartment. But this is what I just want to touch on the competitiveness still, and this is more so on the commercial side, is that this property, it's a C class property in Indianapolis, and it's in a B minus to B location. And what the seller, I mean, excuse me, what the buyer is offering, it's about at a three, it's about a four cap, is what they are buying this on. They are a 1031 buyer, which they is essentially they are having taxes on their gains. So it's so they're willing to pay a little bit more, but this just goes to show you that people are still paying a premium for properties at this present time, and even though the rates are still going up, and we'll have to see how this ends up shaking out on this particular property, because they were actually supposed to close June 24th, so about 4 days from now. I forget what day it is half the time. But yeah, they were supposed to close, and then they ended up pushing the closing, and just due to financing, and they haven't received the reports back. So this is the deal I will go ahead and just share with you. And this is in Indianapolis, Indiana. And just to show you that the market still is where it is, and this is why the very last property I'm selling is on bought this 2 years ago, you guys, and on the 5 year projections was on the 5 year projection is this person is offering more than the 5 year projection with the property being stabilized on that 5 year projection. They're offering more on that, and we're not even fully completed with the renovations on this property, increasing the rents and stabilizing it. So that just goes to show you what we're still seeing in this environment. And let me go ahead and check the comments over here, make sure everyone can hear me. And I will get to there'll be a section here where I'll get to the chats. Appreciate everyone so much for being on the live. And then at the end, I will queue up these questions that we have here too. So this is the property here, which is the on the 5 year projection. The sale price that we had on this was at $9.9 million, just a little bit under that, and the buyer is actually offering, and again, this is a 5 year projection, that they are receiving substantially more than that. I won't go into the details just yet because it hasn't been closed, but it was just one of those prices that people are still willing to come up. Is what we're seeing, especially in the commercial and multifamily space, because there is low inventory and there is still a high amount of demand. So yeah, this is the deal that you see there, and this is the before that you can see where the renovations that were being completed on this particular property is had to replace all of the roofs. So there's a total of 16 buildings, of which 12 of those are pitched. And then four of those are actually flat roofs, which flat roofs are not the best. But as you can see here, so this is the property, and then this is more of a okay. It looks like I got kicked out. I'm not even going to re-sign into that right now. But you can see from the aerial view here that on this side where you can see my mouse is at, that is the aerial view of where you can see just more details on the property, and those are the floor plans. So let's go ahead. I want to jump into some chats for my favorite people here. All right. So my man, Aaron, great to see you as always back in the 317. All right, great to see you as well. Brandon Meth, you. I hope that I pronounced that correctly. All right, we got Mac Miller in the building. I'm just kidding. Christopher, always great to see you. And then we've got Kumar from Montreal, Canada. All right. I believe I just spoke to someone on the phone right before this, and they were saying that 6 months throughout the year, it is snowing outside. It's winter. Great to see you, LinkedIn user from Los Angeles. And Michael, I will queue up your question at the end on why did you sell, personal or business reasons. And then we've got Andreas. Yes, just spoke with you. Wow, small world. All right. And then Ed Bowler from Phoenix. So let's go ahead and jump into the next point here. Let's go ahead and remove this. And there's quite a bit going on. So, all right. This is what I have learned when it comes to the industry, because as the question was just asked earlier, is that one, why did you sell, and are you getting out for the long haul? No, right now I'm just looking at the data and then what people are paying for properties, and have just placed a hold on it. Yes, I'm still nurturing relationships with owners, but it hasn't been formally as aggressive as what I've done in the past. And just what I've learned in is that from others who really built substantial portfolios and really was able to scale is when a downturn happens. And this is a quote that Warren Buffett actually says, is that when others are fearful, that is the time to be greedy. And when people are greedy, that is the time to be fearful, which I believe right now. And it's starting to be a slowdown, but still in the multifamily is that it's the time where people are greedy, and it's a good time to sell because people really want inventory and they want to buy, and that's the perfect time to sell. And at some point there is going to be a correction, and this is just my belief. And one, I'm not perfect, and I could be completely wrong on this, but there will be, I won't say to where it was during the 07, 08, 09 time frame to where we saw that type of correction. But I believe there will start to be a pullback, which I'll actually get into my next point as well. There is going to start to be a pullback because one, interest rates are going up. And then you've got sellers' expectations that are here. Buyers can only pay so much. And there is that small little gap that is there. And this is one of the things that Ray Dalio actually talks about, that how everything goes in cycles, and it's the same with this the same with this industry. And if you haven't read the book, gosh, what is that book by Ray Dalio? Principles. It's a great book. It's a tad bit mundane for me, so I skimmed through it, and then I went back and did a summary of it. But this is what the cycles that he talks about, and he's got different graphs. This is more so the GDP on the from a macro level, but he also just talks about this same cycle happens in just about everything. And this is one share that I've learned, is that the many of the cycles that do happen is, yes, it's a cycle in, let's say, real estate, for instance, because it's always in cycles. And yes, if you look at it at its core, as an example, that real estate, yes, it's in cycles, but if you look at it long term, it's up and to the right. But it's about those dips, if you're able to make it through those dips and weather the storm. And that's another question I will actually get towards at the end, is about how to make it through those dips, and hopefully you bought the property right. But we'll get to that. And it's the same. The biggest aha that I learned is that what some of the things outside of macro that affect cycles when it comes to real estate, for instance, or other industries, is human nature. Yes, human nature is that us as humans, we're very cyclical, or that we go in cycles ourselves. Just think about this: is, let's say, in stocks, or if you're in crypto, or whatever the investments that are crashing at this moment, or have really been affected with things such as the raise in the interest rates and the inflation, all these different things, is that what I'm not understanding is that when people they'll buy into something when it's starting to get to the top, and then when it crashes down, that's when they'll take their money, and they'll start to take their money out, and then they'll do it all over again once it's going back up. Then that's when they'll put the money in, because it's the fear and greed. They get scared and then they take their money out. So it's the same thing. It goes in cycles. So that's one thing I've just really started to learn is, yes, understanding the cycles in industries, for instance, but understanding people. If you can understand people, that will allow you to get ahead of the curve. And just one little side note, I believe right now we're experiencing one of the biggest wealth transfers. It's a good way in what we're seeing in certain markets, and it's not so much affecting real estate at this moment. Let's say stocks, for instance, is that it's getting crashed down. People are getting scared, taking their money out. Most people maybe taking a loss, or many people taking a loss. And then what happens is you've got the big money that comes in, swoops everything up at a discount. Everything starts to go up, and then the small money comes in when it's going to the top. Big money drops, and then the same cycle happens over again. So it's one of the things I've learned, why the rich get richer. But all in all, is that I look at this as it's just a patient play. And that is that, let's say I haven't bought over the past year, that I'm 31 years old, and this is a long-term play that I've learned, or a long-term industry. So as long as you have that viewpoint of being long-term minded, not taking any shortcuts, and yes, may not buy this year or buy the following year, but I've learned from others who are even further along than their journeys than I am, that they and I'm is they say that, yeah, there's sometimes where I don't buy it, then I just go on a complete spree. So that's what it just comes down to, is just having the patience and a long-term view. All right, let's go ahead. I just want to get to some chats here. I know I'm just cranking through this. And again, as mentioned, appreciate everyone so much on here. All right, Lorena from Rick. I don't know if that's a place or if that's a specific person. All right, we've got Rashad Saeem from Chicago. All right, curious if you know Kanye West here, because and we got Christopher. I'll get to your question towards the end, and then we got Cheyenne Amos. All right, all right. You guys are going to learn today. Okay, I think there is one more. Are you doing any strategy against the capital gains tax when you sell? Yes. So I will get to that as well. Great question. All right. So the last point that I do want to mention. All right. So can't post comments. Why is that there and it won't let me move it? Okay. So the last that I want to mention here is that, and I touched on this briefly earlier, is that sellers' expectations are still at an all-time high, especially when it comes to the commercial space and multifamily. And then buyers are still coming up, and we saw that on the deal that I showed earlier. And at some point, as the rates still end up increasing, there's going to be that gap between who's going to end up coming up. Is it going to be the buyers or the sellers going to come down? And over the years, the buyers have still steadily came up, but there's starting to be a shift to now from a seller's market to a buyer's market. It's not quite there just yet, especially as I've spoken to other investors. I've spoken with brokers, and the same sentiment that I've gotten primarily in the industrial, the retail, with people leasing spaces to businesses, and then also commercial investors in the multifamily is it's still very strong. The residential, however, has been affected. So I believe that may be the first sector that really starts to see more so a pullback because it's already seeing it to where it used to be an agent would list the property and they would go to or let's say there's a listing and then the buyer's agent would go to the buyers and say, hey, there's this property that's available. What you're going to have to do is you're going to have to be very competitive. One, that you're going to have a shorter closing time frame, or let's say that's the case, but mostly is you're going to have to offer over asking. And however, now what I've been hearing from agents is that the one that it's not so much, and there would be a bidding frenzy as well. But now there hasn't been so much of that demand to where now the property is actually sitting a little bit longer. Yes, there is multiple offers depending on, again, this is market dependent. So I'm just generalizing more so the feedback I've got from investors. But the demand overall in the residential side has gone down quite a bit. So and with that, I want to show an example and why I believe also, and this is here in Texas, that why I believe that this is going to be. And when it comes to the news, is I am what do you call that? I always like to go to the actual source and understand because when it comes to media, they want to capture negative, negative, negative because that's what sells, and they want to keep people glued because that's what they want. They want attention. So I just want to, when it's certain news, I always want to dig under the surface and see exactly what's going on and make sure it's just not a bunch of FUD. But here is an example of property tax bills that have been going up in Texas, for instance, and Austin has really been affected to this. And this is on the residential side to where many owners of properties just did not budget that property tax increase. And with that increases, they're starting to they want to contest the appraisal and their property being reassessed, but many people just aren't able to afford it. So they're going to have to end up selling the property. So there could be a huge influx of properties that start to come up. And we'll have to assess, is the demand still going to be there? But the thing is that with the rising of the interest rates, that could really affect what buyers can actually pay in that case, and then sellers may have to come down, and then they're in a situation to where they actually have to sell. So that's where the whole house of cards can end up happening, and that's just one example. With the appraisal, there's other things that could also factor that as well. So that's what I have, you guys. All in all, I just want to jump right into it with the meat and potatoes for you. No fluff on this. And all right, so let's go ahead and jump into some questions here. All right, the facts. And all right, so let me see if I can remove this. All right, so we'll get to the question that was here at the beginning. So, all right. Question here, why did you sell? Personal or business reasons? So on this particular property, it just made the most sense when we're looking at the numbers. If someone is offering, and this is in this particular case that bought it 2 years ago and they have not fully stabilized the property, it was about $2 million putting into it and still have more to go, about 25% to go, a little bit less than that, give or take. And someone is offering on our stabilized projections on the 5 year over that by a significant amount. So it's just one of those things that, can decline the offer and hold on to it long term, but just decided to take it. And then, yes, the issue is, okay, what to now do with that money because where we are at in the the market. Your name is Michael, and I said while we're at in the Michael. You get where I'm going with that. All right, so are you intending to 1031 to a larger deal with the other assets sold from your portfolio? I'm considering 1031 as I got so much equity in the 11 units. So on this particular deal, we'll not be doing a 1031 exchange. And for those of you who are not familiar with that, that's just a way for you to not pay taxes, or quote unquote not pay taxes, but you're essentially deferring taxes. At some point you'll pay unless you just pass it on to your heirs after you die, then you don't have to ever pay taxes on that. But that's another conversation in itself. So I'm considering 1031 as I got so much equity in the 11 units. Yes. If you can find a deal at this point to be able to park that those funds into, which is the current buyer on the deal, and we transacted with them before on a 46 unit deal. So they've got a good track record of closing, but 1031 money is the best type of money that you can get because one, it's tax free for them and they want to deploy it, and then also is the time frame. When you're in a 1031 exchange, you have a certain amount of time. So usually you're in a situation to where you have a time frame to where you actually have to find another property and then close on it. All right. Are you doing any strategies against the capital gains tax when you sell? Yes. So I do have some losses from previous years that I will be able to offset the income for myself. All right. And hello from Houston, Texas, where everything is bigger except the toilet at my apartment. It's the same size as the ones back in home in Indianapolis. All right. Single family properties will indeed be impacted. Multifamily properties will continue to outperform, especially if they are great assets in supply constrained markets. Correct. Unless I would say a black swan event happens, which, man, the government or what? Well, I don't know if the feds are watching if I say this, but if something just happens completely out of our control, let's say a rent moratorium, something along those lines that's just completely out there that could then affect the multifamily, more so the commercial space, then that's when I can see a definite pullback happening. But I just see multifamily continuing strong and outperforming single families, not so much. But that is just what I'm seeing, and also speaking from others and looking at macros. All right, from Kyle Haruff. Hopefully, I pronounced that correctly. Is happy to be here. Thanks for always dropping relevant bombs and keeping things fun. Yes, I want to give you that edutainment as a way to keep you entertained while at the same time you're investing in yourself and investing in yourselves and giving me your time. So yeah, I hope to provide value as well in exchange for that. So that's all I have, you guys. I wanted to be in and out, get you the necessary content on why I am quitting real estate and no longer in it at this moment in time. I'm still in it, but I'm completely out after actually selling this last property. So do you think house prices is going to drop? I want to buy multifamily house cash. Well, if you're referring to single family, yes. Multifamily, yes, there will start to. I believe in one. This is just my belief is there will start to be a small pullback in multifamily, but nothing like I believe we'll see in the single family that's already starting to happen. And all in all, whichever class you go with, is that real estate as a whole always goes up and to the right. Especially when you look at, I'm actually reading a autobiography by Dr. J. Julius Erving. And it's funny the prices that he mentioned when he talks about getting a loaf of bread and buying a house, and this was in the 1940s and 1950s. But it's the prices he's talking about, and he talked about buying a house at that time, and the price now of houses, that just goes to show you how real estate is always just up and to the right. But it's just about making it through those dips if you happen to experience a dip, and you got to cash flow through that. All right, and lastly, yes, feds are always watching. Yes, they are. I know there's some. I'll just keep it at that because I'm probably bugged where I'm at. All right, we just have to make sure we look out for them. Yes. All right. Well, appreciate you all so much. Always great to see you. Until then, keep being awesome. I'll see you on the next stream. Thank you so much. All right.